How bubblicious does this one look to you?
Well, it looks a little bubbly. I mean, we all know the street has its ups and downs, and I told Seth, I said, welcome to being a public company. But I mean, I think this stock has legs. I really do think we're in the early innings. They launched their burger pack in Whole Foods yesterday, or 2 days ago, I think, at $10 a pop. And I looked at the unit movement. It's already pretty darn good. So this is not a late inning thing. This is early on. So they opened up in Amsterdam, right? They've got that facility working there. There's demand worldwide. So look, I think the investment community is saying we want some growth. We want a growth in the food sector. Where's the growth? And here it is. So valuation will have to sort itself out. We all know that it's a longer thing, but that's where we are.
Is it difficult to quantify the total addressable market that really exists for something like this? I mean, you go from running a supermarket chain to you have your sort of legs in the restaurant industry. We were talking earlier as well, so you know the market from all aspects well.
Yeah. Well, remember, this is an ingredient, it's a consumer product, and it's also for the restaurant channel, so they get multiple paths to market. But I don't know brands as well as I know retail, but I just think it's got a fair amount of potential because the demand for plant protein, both alt dairy and alt meat, is huge.
So does it pass the Walter Robb test of being, good for you, clean? Because I hear a lot of people saying, look, there's still a ton of calories and there's chemicals in it. What do you think?
Yeah, I mean, in truth, the con argument is it's made up of a number of isolates from pea, rice, and sunflower. So it is but I know that they're working on moving it more in the direction of a complete whole food. It does have a lower environmental footprint, so for customers who are concerned about that sort of choice, it's got that going for it. Nutritionally, I think it's a little stronger in terms of salt and sodium and fat, but I'm a whole food guy, so that's kind of my first choice.
How do you think CEOs of supermarket chains, grocery stores are thinking about a company like this and products like this more broadly?
Well, it's clear to me that the capital markets have woken up to food as a space in general. They've been kind of silent for the last number of years. There's a lot of money pouring in. There's a lot of deals. I think almost 300 deals last year, M&A of that sort of thing. So it's clear to me that they're saying food is part of touching health. It's part of technology. It's touching all these different sectors. So I think it's got a real future.
Will you walk into will you walk into the grocery store and you'll see all of the brands of meatless products next to each other, all different sorts of burger brands, or there are going to be one or two winners out of the pack?
Well, that's what's interesting in this particular case. In the Boulder store where it started, it's actually in the meat department. So here's the alternative protein, and here's the rest of the proteins. And it's clear to me most of the action in new food, if you will, is in the alternative dairy and the alternative protein. That's about a third to 40% of that. So it's being merchandised as a protein, and the customer's saying, I want that choice.
That's kind of what I was going to ask, which is how high is the barrier to entry to make these things?
Well, I mean, this has been 10 years in the making for this product, and so it's not like it just showed up yesterday. It takes time and investment, and there's been a lot of money that's come in before it went public. So, but hey, for Whole Foods, remember, we were kind of in the shadows for 10 years, and the same sorts of questions that are being raised about Beyond Meat were raised about us. Say, hey, you guys will never have enough to sell. You're going to run out, or once the competitors get in, you're going to go down. It's very analogous for me when I think about the situation. So I think Seth and Ethan have a lot of promise ahead of them. You know what the market's woken up with this stock, and so you're going to see a lot of competitive entries happen over the next number of years, but it's going to take them a few to get it right, and so these guys have got a nice head start. Okay,
so from in the shadows to the intense sunlight of Amazon and on Whole Foods now. There's nowhere to hide anymore. Has Amazon made Whole Foods better or worse?
I believe it's made it better. I believe the fusion of the digital and physical through the Prime Now is digitized the physical offering we developed over 30+ years and made it more available to more people. I mean, I think it's a big question you're asking. We could go a whole show just on that. But on balance, it's taken the Whole Foods quality standards and brought them forward to a much wider audience. So retail is in a tremendous state of disruption right now. You're seeing just amazing changes. Like we saw yesterday, Walmart says we'll put it in your fridge, right? You have to work for Walmart for a year. Amazon says we're going to drop a drone at your house, Sarah. Are you okay with that?
Not in New York City.
We're seeing 7-Eleven open brand new formats. We are seeing Hy-Vee, traditional mid-market stores saying, I'm going to try smaller format stores. We are seeing basically people say, I have got to try to find a way to innovate and get some growth, because if I cost cut, you have a Kraft Heinz situation where you're going nowhere, right? So the innovation is the order of the day, and I see a tremendous amount, and I see the capital markets saying, I want to get in on this.
Yeah, I just want to ask you about some of the news today from Amazon, and that is that they're getting out of the food delivery business,
That's right.
so competitive with the Grub Street, or Grubhub, excuse me. Grub Street is the blog on New York Magazine. What do you make of the fact that they're bailing?
Well, let's be clear. They bought Deliveroo, which is the largest provider in the UK and Netherlands and so forth, so they're not getting out of the business. And remember that from Prime Now through Whole Foods, you can have your food delivered within an hour if you choose to do so. So they're still delivering food just through those other mechanisms. But their effort at Amazon Fresh didn't really succeed for the last 10 years. So there are some areas where I think they cut their losses and say, we'll focus over here. So what I make of it is this is an incredibly robust area. Nobody's really figured out the financial model yet, but nobody's figured it out. The only place it sort of works is when you combine it with a physical store so that the inventory, the supply chains can be merged. So what I make of it is a rational business decision on their part, said, hey, we're going to focus on these other areas.
But what about Uber Eats? Aren't they growing like Uber Eats? Isn't it growing like crazy?
Well, I mean that's part of the larger Uber story, and I don't know your views on that. To me, I don't see a pathway to profitability there, but I don't know. But Uber Eats seems to be, the customers clearly said, I want my stuff and I want it in 30 seconds. Probably you, Sarah, you're busy. You're probably like, hey,
I order a lot
bring
of
it to my
delivery,
house. I want it now. So I think they're one of the folks that survives just because they've got the capital behind them. But Grubhub is doing well. DoorDash is doing well. Look at the valuation on the last round for DoorDash. So but the business model hasn't really been proved out yet.